Welcome back. Really a soft, disappointing start to the earnings season. Alcoa shares down 11.4% yesterday after the metal company's quarterly profit missed earnings expectations. Illumina shares also plummeting 24.8%. Peter Kiernan is with us today. Investors have been looking for some kind of earnings growth, Peter, and some kind of guidance for the next year that things are going to get better. We're not getting it. There's a basic disconnect. What's been going on in Q1 and Q2 is that everyone's saying great earnings are coming at the end of the year. Yeah. Look for earnings at the end of the year. And now is the end of the year. We're in quarter 3 and quarter 4, and you better deliver. And so everyone says the markets aren't that volatile. We're near the all-time high. What you're going to see now is super punishment. If you miss your quarterly earnings expectations now, your stock's going to have an accident. Yeah. And anybody who misses gets punished. We really need, we have this dire situation where you have price-earnings ratios of 20 times. But the economy's only growing 1%, and Europe's not going anywhere. So how do you grow on a company 15% earnings year over year when your economy is flat? Yeah. I think people are starting to ask that question, and if you don't measure up, you're going to get punished. Well, they're afraid of demand. We know that, Dagan. But they're also looking at the regulatory environment and saying, I don't know what's around the corner in terms of when this is going to stop, especially small business, in terms of getting strangled with some of these regulations. Right, and is there any reason, because even if Donald Trump got elected to the White House, this is not a ship that's easy to turn in terms of the record number of regulations that have come out of the White House in the last 8 years. And then you also have potentially higher interest rates from the Federal Reserve. I mean, would that knock the chair out from under? I think we're going to have a major accident because there are so many people that are going after yield, doing anything if there's a rate hike in December. And that's why people are so fastidiously focused on the minutes of the committee today. Who reads Fed minutes? Today, everyone's going to read Fed minutes because they want to see how many people disagreed with this notion of holding. I think we're really starting to see momentum build for a December hike. We heard from one business leader yesterday. Home Depot co-founder Ken Langone was on Fox Business. He says Americans are angry with their government. Listen to this.
What Donald Trump represents, the anger and disgust of the American people with their government. They've been failed badly by their government. Look at the deficit. Look at the conditions of our roads. Public education. The biggest threat to us as a nation is income inequality. But if you want to close that gap, educate people that they have economic value and people want to hire. Home Depot has never hired one single individual for minimum wage, and we never will.
See, that's my point, right, Peter Kiernan? I mean, he's looking at regulation and these rules that are around the corner, you know, minimum wage, and saying, why would business invest right now and hire new workers? Well, that's the problem, and you can't get people to invest just by having low rates. That's been proven, that this whole monetary policy of holding rates artificially low, it will stabilize things, but it does not incite a market to grow. Right. It basically prevents disaster. And so the issue in a nutshell is we've increased the minimum wage 7 times since Reagan. Do it 8. It's not going to solve the problem. Yeah. Creating good quality, high-paying job, that's the way out. The other thing is we're right before an election.
Well, that's my thought. If you're right before an election, it's only smart for businesses not to be expanding right now. They shouldn't be doing a whole lot, I think, except staying put and seeing, is it going to be Clinton or is it going to be Trump? And we really don't know. I don't think we have a super clear leader at this point.
Yeah, for sure. And we got the banks coming out Friday, Dagan. We'll see what happens there. I mean, the valuations have gotten to places where people say, look, you really need to show me that you're seeing growth if I'm going to buy into this story. Any expectations in terms of the banks? Is that going to be a market mover on Friday?
If there's some bomb that explodes within one of the earnings reports, Peter could speak to it better than I can. But again, they need higher interest rates to help make more money, and so they've been sitting around jawboning about that very thing for months, if not years now.
Yeah, if you look at the market, the 2 places where we've been held back are financials and energy. Energy is starting to see a little bit of lift in oil prices. That'll help some. I'm actually looking for J.P. Morgan to have a pretty good quarter. I think they're going to, but the banks can only go so far with these skinny interest rates. It really is what forces people to push fees and products, which is what got Wells Fargo
into trouble in the first place.
Yeah, and that trouble continues.
Well, like J.P. Morgan got rid of the overdraft protection in their checking accounts, I think, for at least some of their customers, trying to cross-sell products like savings accounts.
Trying to get ahead of it.
Yeah.
Yeah. All right, we'll take a short break. Coming up.